So, talking about these earnings, another thing I realized is, look, the large caps. This is before we get to China. The large caps are doing very, very well. We just saw the majors report. We'll break down those numbers in a second. But you have to focus, and you should own companies that have pricing power. You know who has incredible pricing power right now? McDonald's. You know who has incredible pricing power right now? Chipotle. You saw those numbers come out. You know who doesn't? Starbucks. Starbucks came down. They don't have that kind of pricing power, and the supply chain issues. If you go to Starbucks, you'll know, because I'm a tea guy. Feel free to make fun. They don't have English breakfast tea anymore. I go there to order a protein box. They don't have it anymore. Almost anything is out, and they say, sorry, we have supply chain issues. Still have supply chain issues. Plus, they're leveraged to China. And be careful there, because China is a growth engine of the world, accounting for 40% of GDP. I know everything about China. Why? Because that's why I thought the market would absolutely crash when COVID came here, because China, they absolutely closed China, which is the growth engine of the world. Make sure if you're buying a company, how much sales are going on in China. Apple, you don't have to worry about, because Apple's with the government in China, so they're fine. But a company like Starbucks is a little different. So not only have supply chain issues, but now they have China issues, and you're all over this China thing, right? I mean, it's industry by industry. So I just saw a price target from one of these educational companies go from 55 to 8.
Yeah.
The price target. I mean, everybody's like running for crazy, right? I mean, holy cow.
Yeah, there was so to your point, I mean, Apple reported blockbuster numbers. Starbucks is still looking to grow stores over there in China, but it makes you look and think what's next, because they started with, China is a controlled country. It's, they hardly let capital out, only capital flows in. That's the regime. That's the way they have power over there. What's changed recently is just them enforcing or cracking down. So we saw that with Jack Ma, how he kind of disappeared. Not kind of, he disappeared. Alibaba, has come back down off its recent highs. They shut basically down the Ant Financial, which is an arm of Alibaba, to go public. Then they went over to Didi just a couple weeks ago. They pulled the app. Tencent, which has the most popular social media
WeChat,
instant messaging WeChat that everybody uses, or a lot of people use. So it makes you what if they just changed their mind and said, well, I'm being extreme here to make a point, but look at what's going on in extreme. They crack down on online education. TAL, if you have a chart, TAL, Frank, that stock was over $50 a share, I believe, this year. Mm-hmm. Now, I got to give some credit to some short sellers that I follow on Twitter. They've been calling that name out for over a year. You could argue they were wrong or they were early, but man, even though the stock has popped yesterday and I think today again, it's absolutely gotten smoked from its what? Do you have that chart up, TAL?
Yeah, I'm going to put it up right now.
Okay.
Yeah, so
was I thinking correctly? Was it over 50?
Yeah, well, it's up 15% today.
Right.
But it was 20 2 weeks ago, and it fell to $5.
Okay.
Actually, $4, and now it's like $6.
And the point there is that they can do anything. They don't have to go through procedures or anything. So what if they told Tesla, "Hey, you're done expanding," or Starbucks, "You're not allowed to open up any new stores"? That brings a big risk. And I encourage everybody, go to Kyle Bass did an interview on CNBC. Was it yesterday or the day before?
I think it was yesterday.
Okay.
I like Kyle Bass. Yeah, he's good.
And he made a very bold statement that at first I thought, okay, that's a bold statement and just kind of for attention in a sense. But it was so accurate, because he said, fiduciaries, how do you go from being a fiduciary for somebody and recommending that without opening up the door to tremendous amounts of lawsuits if things go bad? I mean, there's a lot of people that are going to get smoked off. And Kathy Wood, ARK Invest, I think she sold the majority. I read yesterday, I believe she sold the majority of her Chinese stocks out of her ETFs because, and no offense, I'm not getting on her or congratulating her, but how do you not do that? Like, how do you stay invested in some of this stuff when you know?
Can't, with the government,
that's a big gray area. Now, that's a trading opportunity. Like I said, if you bought TAL the last couple of days, you're up. What did you say? It was up 15% today?
15% today, yeah.
So that's a huge risk that you just have to pay attention to. The easiest thing is just to avoid them. You don't have to buy Chinese stocks to make money, but you do need to pay attention to who has the supply chain issues over there, who's trying to grow through China, and just know that's a headline risk where you could wake up at any moment and bam, things are changing on a 180.
When one of the major trends I'm seeing right now, and I know a lot of people do not know this, and because I didn't even know it, and I follow the markets, that in the past 3 months, what have we seen, right? What are the risks to the market? You have inflation, right? What we've seen. We've seen labor shortage, which we've seen supply chains, right? Just delays in supply chains. And who does this hurt the most? it crushes small cap companies, especially small cap companies that don't have earnings, especially on the inflationary front. So right now, our small cap market is telling us inflation's running wild. They do not have the pricing power of the large cap companies. They can't pay as much as the large companies to hire good employees right now. The supply chain issues, they can't bid or they can't even compete to get their products over here quicker than the large guys because you have, and right now, from sources I know, you have the Amazons, the Walmarts, they're outbidding everybody to the point that they're taking losses. They're taking losses to destroy a lot of their competitors just through the container process. So what does that result? Well, you look at the Russell and you say, well, the Russell's up nice this year. Let me tell you something. The last 3 months, and I said this to you, Daniel, that's nearly 70%, which surprised you, nearly 70% of the Russell 2000 companies are trading lower over the past 3 months. That's a crazy stat. I didn't know it was that high. You would think like, wow, the market's in the all-time. Even if you look at the new highs and lows list, these as of yesterday, we saw on the NASDAQ, it was 55 new highs. It was over 250 new lows. You wouldn't know that, right? Because what are you seeing? You're seeing the majors freaking report, Microsoft, Google's, Apple's, and just the numbers they report are credible. AMD reported great numbers too, and they just finally broke out. So let's see if they can break through 100. But they revenue jumped 100% for the second quarter in a row, grew revenue. So AMD's really killing it. A name that I feel like is under the radar because all the big guys reported. But be careful because this is opening the door for more and more money to go into the larger names. Why? Because these are the companies that are going to announce the biggest buyback programs. And who is that? We have Chubb in the portfolio, which is your name, right? In Curzio Research Advisory portfolio, right? They reported good numbers, stocks down just like everybody else. It's typical. But we're up nicely on that. We're 40% plus. But they announced a monster buyback, right? So, and then that's great news. And then you have AutoNation, same thing. I mean, both these companies are buying whatever 7 to 9% of their total float outstanding. Then they have, money to pay for good labor, which small companies don't have, and they have pricing power for inflation, which a lot of small companies don't have. So you're seeing a major shift into the larger names right now, and it's a tough environment for small caps, and I feel like that's being lost among all this. I don't see people talking about that where, hey, the markets look good and they're up and they're near all-time highs, but if you look at the underlying trends in the market, there's a lot of names that are getting murdered right now.
Yeah, absolutely. And it's not, it's a bummer because the more regulations and the more influence and the more political headwinds you have are going to cause the gap between haves and have-nots to widen. I personally believe that's done on purpose. That's a conversation for a different time, and I know a lot of people disagree with that. But if you have continuing regulations on all kinds of fronts, from mask mandates to travel limits to everything, that's going to coupled with inflation, there's no way that can't cause the gap between haves and have-nots to go wider. And what that means is go into big cap stocks. And that's going to be the smoothest sailing for the next few months at least on that front. Doesn't mean there's not going to be great opportunities in small caps, but just be prepared for choppiness to lower prices until the market either gets comfortable with higher prices across the board and or we get a new growth catalyst.